With crypto markets down so much, clearly the positions that I have on Bitcoin and Ethereum will have to become longer term positions because they aren't going to be in profit for quite a while at the same time I don't see point selling these positions at these depressed prices. Nevertheless, let's have a look at some details of crypto markets, and welcome to myfinanceteacher.org. Currently, the Bitcoin cycle is 34 days old. And yes, zooming out, you will notice that usually these cycles are around a couple of months long. Over the last couple of years, the average has been 61 days, with the shortest cycle lasting for 49 days. But looking at how depressed Bitcoin is right now, it's far below the wide Bollinger Bands. The 14-day RSI is at 20.6, and it's 50% down below the 200-day moving average, which is quite a lot as well. I think there is a pretty good chance that this cycle might actually finish relatively soon over the next few days, perhaps giving us close to a record short cycle. During high volatility, sometimes we do see relatively short cycles. One of these record short cycles in December 2017, when that very peak into the $20,000 took place within the cycle lasting for only 40 days. If memory serves well, this perhaps is so far the record shortest cycle we've seen over the last few years on Bitcoin. And look at how history rhymes. We are close to that $20,000 price again right now. And just like the previous crash into the cycle low in early to mid-May was accompanied by a debacle with Luna, we have another debacle going on with Celsius. Celsius, some sort of a crypto lending platform, due to its borrowings of DAI from MakerDAO, is threatened with liquidations if Bitcoin drops down just under $17,000. That liquidation might actually affect 24,000 Bitcoins. So it will be curious to see if that liquidation price level of just under $17,000 is going to be acting a bit like a magnet, keeping Bitcoin on this downward trajectory for that liquidation before we see some sort of a cycle low and a bounce into a new cycle. Although that might not be the beginning of the bull market yet, and we're only likely to recover temporarily. Usually cycles last for a couple of months, so perhaps 2 to 3 to 4 weeks of a bit of a recovery. And looking at this Bitcoin optimism index, perhaps a bit of a recovery might actually come relatively soon, maybe over the next few days, even though the cycle is still very young at only 34 days long. After all, this Bitcoin optimism index, it's only at 4.62. So the low is likely soon, although sometimes the actual price low comes a few days after some sort of a low on this Bitcoin optimism index. For example, looking at this late 2021 low, we see that Bitcoin price continued down for another few days to create some sort of a positive divergence with this optimism index. Same thing happened over here in mid-2021. We see a bit of a low on the optimism index, followed by the price low a little bit later. Same picture is also on the crypto fear and greed index, which is now at 7, which is the lowest that we've seen over the last year. And zooming out to several years, crypto fear and greed index has only been lower than 7 once over here in the middle of 2019. So we are quite low on a lot of sentiment indicators, and a bit of a bounce is possibly coming over the next several days, especially if today the Fed raises by 50 basis points rather than the feared 75 basis points. After all, lately we have seen quite a lot of correlation between cryptos and the general stock market. Here's that correlation between Bitcoin and QQQ, that's a 10-day correlation. And since the bear market in crypto, since that last high on Bitcoin at around $69,000, we see that this correlation has been positive for nearly, I would say, 90% of the time. And once you zoom out, this decline since the most recent all-time high does remind you the previous bear market drop with these 3 bounces into short-term cycle tops before the waterfall decline. If you go back to that previous bear market all through late 2017 into late 2018, yes, it has actually taken longer, but if you align the tops and squeeze it in a little, doesn't it kind of tell you that history, although it doesn't repeat exactly, but it does sure rhyme? A drop down into the bear market, 3 short-term cycle tops before the waterfall decline, which back in late 2018 was the end of the bear market a couple of weeks later. So perhaps the ongoing bear market is about to finish over the next several weeks as well, Who knows? Nobody knows the future, but after all, we have retested the previous all-time high of $20,000. That's one of the significant milestones for a bear market correction. And talking about how history rhymes, the couple of previous bear markets lasted for, on average, just over a year, somewhere around 380 days. Currently, we are only 217 days into this bear market, counting from the most recent all-time high around $69,000. So perhaps this time we won't see an immediate bounce back up above this 200-day moving average as we saw with the pandemic drop and pretty much both of the previous bear market bottoms. And looking at this 14-week RSI, while we are on the weekly chart, we see that it's at record low levels all the way since 2012. Again, also indicating that even if bear market continues for a while, perhaps accumulating, perhaps dollar cost averaging over the next several weeks, several months, might not actually be too bad of an idea.